Hey folks, Dan Frio here with your market update for February 20th, 2024. So we're going to talk about it in today's video is why did mortgage rates spike 1/8% in one day? And then the latter part of this video we're going to talk about is the Federal Reserve. Is the Federal Reserve going to pull off a soft landing? Data is looking pretty promising. So without further ado, let's get over to it. So what you're seeing on the screen right now, these are the top 6 products people use when they're buying their first house. These are not my rates. These are not any individual bank's rates. What this is this is a survey done by Mortgage News Daily, and they asked the banks these 5 questions. 5 questions are, if you had somebody looking to buy their first house, it was a single family home and it was going to be their primary home, you're probably like, Dan, that's me. There's more to this equation, so hold on a second. These people have a 780 credit score and they're putting down 25%. So you don't need to do that, okay? You can actually qualify for a home with a 580 credit score with 3% down. I'll give you all my information at the end of this video to help you guys navigate that environment. So without further ado, let's get over to see why all this is happening. So the first thing we look at on a daily basis is the economic calendar. What you're seeing on the calendar for this week is really nothing. We have on Wednesday the FOMC meeting minutes. Basically, they're going to open up the books for the last meeting that they had and show us exactly what they talked about. Don't think there's going to be any surprises there. And the only other thing that I'm really concerned about is the initial jobless claims that's coming out on Thursday. So those are things, I don't think there are going to be any huge surprises in those numbers. So what I thought I'd talk about is the Federal Reserve going to pull off a soft landing? So let's get over and look at the details that they're really looking at. They're looking at 2 things. Right now they're looking at jobs and wage growth. Okay, so they're thinking, more and more people getting jobs and they're getting more income. That's going to continue to push up inflation. So I think you're going to see that the numbers actually, after we break them down, they're not as bad as a lot of people think. So what you're seeing right through here, these are the jobs numbers. These are how many people have jobs. Okay, so over the last 2 years, this is where the numbers are. Look how stable these numbers are. So there's no huge job gains. There's really no huge job losses. Then you go down through here. This actually gives us the numbers. Look, there's no really anomalies there. There's a spike there, but that's about it. So there's no huge gains or there's no huge losses there. You also go over here. This is how many people were unemployed over the last, basically since 2004. You're going to say, okay, this is nuts. Well, let's break down these time frames. You go into it. This is kind of a normal market pre, 2008. So the markets were running right through here, and then all of a sudden 2008, remember that time? This is probably the most catastrophic housing market that we've ever seen. You saw the unemployment rate spike, okay? Then people start getting jobs, the market starts stabilizing and so forth. Then what happened here? Well, COVID happened, and everybody and their mother lost a job. And then it came back quite a bit, and look where we are. So basically, we're right down through here. We're pre-COVID, we're pre-everything numbers. We're basically back to these numbers through here, okay? So that's one of those numbers. So there's no huge job gains or huge job losses if you look over time. Well, let's look at wages. So here's wage growth. Okay, so if you look through this from 1998 to where we are now, let's just condense it over the last, let's say 10 years or so. All right, so what's happened through here? Since the biggest crash that we've ever had in the market, what happened in this area? Well, wage growth continued to go up and up and up, as a normal market would be. If you looked over time, these charts usually kind of have a nice little slant up, and it's gradual. Well, then what happened here? In May of 2021, whoop! This is how much wage growth went up. Okay, what happened during that time as well? COVID. All employers needed people to work, and people were reluctant to go back to work because they were, getting stimulus money and everything else. So that created wage growth to just spike. And then what's happening now? This is what's happening with wage growth since August of 2022. It's coming down, down, and down. Well, look at the correlation of that versus this. This is the consumer price index, the CPI. How much inflation is built in the system? Look through here. See where we were through here? Let me put my glasses on so I can check this out. In July of 2022, look at the peak there. And then since there, it's been dropping and dropping and dropping and dropping. Well, let's correlate that with income, okay? Right through here. June or July of 2022, wage growth was at 6.7%. You go over to here. What was inflation levels at that time? 6. People had more money, so they had more money chasing fewer goods because of the supply chain issues. This is what's caused inflation. Okay, so what are we seeing right now? Well, we're seeing the inflation numbers actually come down, and they're not coming down in a straight line. They were 9% not too long ago, as you can see right through here. Where are we now? At 3.1. We've had great progression, and then again, if you correlate that with wage growth, it's right in line. So we don't have a huge amount of people going to work, or we don't have a huge amount of people getting laid off. That's stability. And we have wage growth starting to come back down, and that is correlating also with prices of things also coming back down. So based on the Federal Reserve's job, what they've doing so far, it's actually working, believe it or not. So what's the expectation now going forward of what's going to go on with mortgage rates and what's going on with interest rates in general? Well, to look at that, we want to look and see what the Federal Reserve's, what's the Federal Reserve going to do? Because they control basically everything right now. You see, when the Federal Reserve, they knee jerk, well, the markets overreact. You can see stocks market will either rally substantially or just plummet. Same thing with mortgage rates. So what's the expectations of what the Federal Reserve is going to do at the next meetings over 2024? So to monitor that, what we do is we go to the CME FedWatch tool. I bet you didn't even know there was one. So with the CME FedWatch tool, what it does is it actually does this. Let's scroll down and it explains it to you. What's the likelihood that the Federal Reserve will change the federal funds target rate at the next meeting or throughout this year? So what the federal funds target rate is, or federal funds rate, is the rate that the Federal Reserve controls. Okay, the target rate that it's at right now is between 5.25 and 5.5. It's actually teetering right at 5.33 if you want to dig into those numbers. So if you go down through here, there's a 91% chance that what's going to happen. Let me move my head so you can see it. 5.25 to 5.5. So that's right where we are right now. So the Federal Reserve's not expected to do anything at the March meeting. Well, if we go over to look at what they're expected to do over the rest of the year, here it is. Okay, so there's a 91% probability they're not going to do anything in March. Now in May, now there's a 62% probability they're not going to do anything in May either. I'm not agreeing with that one. Okay, so then they say in June, there's a 50% probability that they're going to cut. And then from there on, they're going to probably cut 3 to 4 times throughout the rest of the year. So that's the projections on there. The next thing we want to look at is what in the heck is going on with, based on today's data, which is nothing. What's going on with the bond market that controls mortgage rates? Well, what really controls mortgage rates isn't the Fed. It's not Bank of America. It's not Chase. It's not the 10-year Treasury. It's a mortgage-backed bond. So this mortgage bond right here through here, it says MBS, mortgage-backed security. It's a bond that trades on Wall Street. That what you need to know if you really want to know what's going on with mortgage rates, what's the price doing? Okay, so here's the easiest way to do this. Here's the price, and here's the adjustment for the day. It's like a stock. Here's the stock price, and it's up or down for the day. This is a little bit different though. If the price is up, okay, the price of a bond is up, that means the yield or the interest rate is down. Well, because it's a mortgage bond, if the price is up, your mortgage rates are coming down. Right now we see the bond prices are up 13 ticks. That means we're going to take a haircut of about maybe 4 basis points off of rates. So we go over to the 30-year fixed rate, you see right through here. So we're probably going to see rates at about 7.1 or 7.125 by the end of the day if the bond market stays steady the way it is right now. So that's my report for today. So there's really not a lot of economic news coming out the rest of this week, but Kyle and I do have a live event tomorrow. We're going to answer all your questions. So if you're a first-time home buyer, we have a live event every Wednesday to educate you guys on real estate. And the nice thing is there, you can ask all your questions. You can ask your questions and we review them live each day or each Wednesday at 2:30 Central Time. We'd love to have you there. So if you want to find out more about me, can you qualify for a house in this environment? I know house prices are high. I know interest rates are high. So you might automatically just say, don't qualify. What I ask you to do is please don't disqualify yourself. Please reach out to us. We'd love to help. So my name is Dan Frio. I'm a licensed mortgage advisor, licensed in all 50 states as well as Puerto Rico. I'd love to help you. How you can reach out to us? Well, go to the rate update. That's our website. And you're going to go right up through there. There's an apply now button right there. That's the easiest way to start your application. Or you might say, Dan, can I call in or can I email somebody? Well, yeah. So when you're on the website there, you don't forget all these tools we have up here above. What you're going to do is you're going to scroll down through here, all past the blogs and the mortgage calculators and everything else, and you're going to see these 2 things right here. Right there's our 800 number, 844-775-LOAN, or you can email me directly at dan@therateupdate.com. Thanks so much for watching, guys. I hope you learned something, and if you did, please don't forget to subscribe down below, and don't forget to join us every Wednesday on our live event at 2:30 Central Time. God bless, guys. Thanks so much for watching. Hope to hear from you if you're looking to buy a house in 2024. Bye-bye.